Okay. Hello, fellow traders. Tis I, TheRumpledOne, coming to you Tuesday, November the 8th, the year's 2022. Let's talk trading. Looking for an entry with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. What we're going to do today, boys and girls and non-binary traders, is we're actually going to look for trades and basically so you can see exactly how we enter or find trades, enter trades, etc. So Walmart, I've got the 1 minute chart up with the flip-flop boxes or the flip-flop indicator on. And in fact, I should probably turn on the shading. It might make it a little bit easier for them to see. Color shade. I picked the wrong color, it looks like. I need to turn on the shade. And I'll turn on the side markers too, just because.
Well, once you get that up and running, let me know, because
we are.
I went and actually took a trade.
At what, 42?
I went long at exactly 42.9.
Yeah, see, we have different brokers, yeah, and you got 3 pips right there.
Right, and I'm still in.
Okay.
We'll see what happens on this candle. The reason for the candle, for the entry was I'm above indicator 2 for a number of dots in a row, which makes me a little bit weary, but I broke the flip-flop box, and it just was just a good place to go and enter.
Not to mention it was the launch pad.
Well, this is true too. And so now I'm thinking about getting out because it's starting to pull back a little bit, so I'm just going to see what happens. If this current candle turns black, then I'm out.
Yeah, if you look to the left, there's that wick sticking up there right about where this wick reversed. So it needs to break this 47 level. Now I'm ticked because I had went in on the launch pad and wound up taking a stop and got stopped out. Okay, it broke it. So looks like we're clear to go to actually right here at the 51 is a I see right here, this is a return bar. So, and I think it just hit 51. So this might be a good place to take your pips.
Plus, up right now, up 7 pips. So I'm out right now. I got out with 6 pips, 6.1 pips. But that was a nice, easy trade.
Right.
Believe me, none of them come that easy all the time, that's for sure. I mean, but it's just nice when a plan works out. And again, here's the rationale behind the trade was we had all those aqua dots in a row, which, like I said before, was a little bit worrisome, because when there's a certain point when you start, the market wants to breathe and come back the other way. But at the same time, I came out of that flip-flop box, and it just made sense to take the trade. My first point of contention was where I was looking to get out was actually at 48.1, and the reason why was because at that point we had trouble earlier in the hour at that point where it just rejected off that line. So once it got up to that area, my finger was on the clothesline in case it rejected it hard, so I wouldn't take a loss. I wanted to take a chance and hope that it got up to the 51.4, 51.5, whatever that number is, somewhere around there. Again, the reason why I was waiting for that was because I thought it would have the oomph to get there. But at the same time, I know that it's rejected in that area at the very beginning of this hour. And also, if you look to previous hour, you'll see that there's a bunch of congestion in this hour. And the way I look at this trading is that, hey, I don't need to be on the leading edge. It'd be great if it gets through this, because if it does break through that, the next place it's going to go to is probably going to be somewhere around 54, 55, and then potentially up to the 60. but do I need to go and do that fight or let somebody else have that fight? You know, like I said, I got 6 pips. You know, if I have a goal of 10 pips per day, I'm 60% of the way there already. And I didn't have to have any aggravation. And that's just generally how I trade. I'd rather let somebody else have the aggravation. I'll take the easy one.
Okay, so now we're coming back down to the flip-flop box. We also have the M1 highest low. It just broke through there.
Right. Personally, I don't take this trade. I know, Tiro, that you'll take this trade here sometimes, but I don't take this trade. And the reason why is because, yes, we are coming out of the flip-flop box, but my indicator 2, I'm still above it, which indicates that, you know, we're above the MA5. So, you know, so to me, that's just not a safe place to go in. And, you know, for sure. And in addition to that, at that point in time, my 5-minute candle was still green, not by very much, but it was still green by a little bit.
Right.
And so I didn't like it. And now, where I could have gone long again was actually at 52.1. I would have gone long there. I could have been up like 3 pips, now 4 pips. I missed that trade because I was talking and not, you know, but the reality is, again, the same rationale as the last trade is because 1, I'm over the top of the MA5. 2, I'm coming out of a flip-flop box. 3, my 5-minute candle is in the right direction. It's green, you know, so it's a very easy place to go long, you know, and like I said, you could have easily picked up what? You know, if I timed everything perfectly and everything was in a perfect world, I could have gotten 4.5 pips.
Right.
The reality is probably would have gotten 3 pips.
Right. Now, the other thing is you said I would take that trade. Well, and maybe before I might have taken that trade, but, you know, normally we use the M5 bias. I've also learned to use M30 and not to trade against it unless it's already hit a maximum range. I don't have the smart ranges up on this particular chart. Let me see. On this one I do, but so you can see this current M30 is at 72% on the smart range. So over the last 100 bars, this one is greater than 71% of the bars. So.
And that's so, you know, it's not a reason to not take the trade or not a reason to get out of the trade. But what it does is it starts to create a bias for you to say, this is a tricky area.
Yeah, this is a strong move up.
Right, exactly. You know, look, it came all the way from the 30. It bounced off that 30 and came all the way up. So this is a strong move up, you know, and if you just look at the hourly chart, you can see that, okay, we've had a lot of candles this today so far where they'll go and run down and then it'll run up above and then it'll run down again and then it'll run up above again and then run down and looks like this one's going to run up again. And so, you know, it's just, okay, you got to know your playing field. You know, every day is different. And that's the fun part about trading is that it's not boring because, you know, there's you got to go and figure out what's going on today. You know, that's got to come into your playbook a little bit and look around and see, okay, you know, what's happening around me. You know, and it's sort of like I forget who this was, but it was a famous old time trader who used to say, you know, if you notice a pattern, play the pattern until the pattern breaks. And that's, you know, that's a pattern that you see today. It's like, oh, here's the pattern. Here we go again. You know, maybe we can go and, you know, give us a little bit more of a willingness to go and take and stick into those extra pips.
Right. Now, the one thing here is you see we've had this nice move up from, you know, the 32 lower high up to now, what, 54, 55. Before price comes down, usually there's going to be some consolidation. It's going to be, in other words, price is going to range here a bit, and then it'll either keep continuing going up or go down. And you notice here in the upper right-hand corner, I have a bunch of multimeters, and they're all numbers. and colors. So the C minus O is telling me the distance between the close minus the open. So now we're 1.9 pips below the open of the current candle here on M1 and M5. But you can see here, these other candles, M15, M30, and H1 are green. And I got close minus previous open, previous high, close minus previous low, and close minus previous close. So you can see when these things start turning red, and then you know that, hey, okay, maybe price now is going to start heading south. Or if you're thinking about getting into a trade, you probably want to see, at least these three columns in the all colored in the direction you want to go.
Okay. Just calling out a trade here. So now we got a new flip-flop box that's in place. We're below the MA5 or the indicator 2 for 2 dots in a row. But here's the caution area, is the fact that we got to clear where that congestion energy is called out. Now that it cleared it, now you got a chance where you can go and pick up some pips. So if you would have gone in, you could have picked up a pip or two, probably 2 pips you could have picked up. But the caution there is that, hey, we have a congestion area. We need to go make sure that we're able to clear that first.
Yeah.
So
go ahead.
My entry would not have been at the flip-flop box of 50.5, but rather it would have been at 49.1. And if I would have taken that trade, looking at it, could have picked up 2 pips, which is, but the thing is, like you said, we don't know what it's going to do. And you got to get past that congestion zone. It looks like it's setting up to build another, another congestion zone here. I don't know if it will or won't. I mean, that's the beauty of that trading, And if you were smart enough, or brave enough, I guess, in the better way, and stuck in, you would have picked up even more pips than what I was calling out.
Right now, see how I would see this. About 6 or 7 candles ago, we have that high wick on the run, and that hit 56. And then you see the next 2 wicks failed to get there, and then that third wick also failed. It got higher than the previous 2 wicks, but it didn't break that. And so then you had the higher low. You had the candle go black right at the line. And even though everything else is telling you, that, you might want to wait. The thing is, when it broke it and you saw how fast it was moving, you could almost jump in. And then at last time, you could take your chance at the psychological 50.
Right.
But once again, it's like, hey, every time you enter a trade, you're taking a chance, and that's why you have your stop loss in place, to see whether or not you can actually, make money on a trade, because you don't know. I mean, this thing could have rocketed up to 60 from here. And if I would have taken that trade, I would have been stopped out. But that's the chance that I would be willing to take on the move if I had made that move. But that's one way of analyzing it. Now, everybody, of course, can say hairy hindsight, but we've been doing this live, so.
Right, exactly. And the thing is that you're exactly right. That's the chance you're taking. You don't win every time. In fact, in one sense, you look at my trading report for today, I'm sitting here at 73% is my efficiency, which is, for me, is not a good number for me.
Yeah.
But it's just because the market's been moving strange.
Oh, that trade after the second magenta dot would have worked out too,
Oh, yeah.
Yeah.
Yep.
And guess what, traders? The fastest 15 minutes in trading is up. And we'll probably let us know if you like this our presentations here on actually looking at the market, and trading. And so we can do these again. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.